One major brokerage house has just made a shocking new partnership announcement with XRP that has now opened up a multi-trillion-dollar business line for Ripple. Also, Ripple may finally see a new path forward and a reinvigorated business model with its recently announced stablecoin business, and how this one surprising SEC investigation outcome will provide Ripple the confidence to provide business solutions for central banks and their respective CBDCs, or central bank digital currencies. In this video, I'll also be covering the recent core inflation reading, Jerome Powell's response, and how consumers and the average American, i.e. altcoin buyers, are getting crushed. This bearish news is only made worse as Germany continues to sell billions of dollars of Bitcoin and creating more fear in the market. With all the conflicting events and poor crypto market performance, it's difficult to know which direction XRP and the greater market are going to go. So in this video, I'll explain why selling your crypto may be a huge mistake. And by the end of the video, you'll understand just how big this new mystery partnership can be and how it can be the catalyst for new all-time highs for XRP. So stay tuned. To kick the video off, we are going to start with the fear and greed index. As of today, we have a new low, and that would be considered extreme fear at the range of 25. This entire week, except for this last month, we've been in the lows of like 26 to 29, as you can see. From a 3-month scale, we just reached a new low as of July 12th, 2024. Now, that said, if I go back to a year's worth of data, the last time we were even near this low was September of 2023. And when I pull up the max, the last time we were actually at the range of 25 on the fear and greed index, we were sitting around January 7th of 2023, which marks the start of this bull run. And when I pull up the Bitcoin chart and scroll in here, you can see that right here we'd have about January 7th. This was the local bottom before the actual move to break above our previous range highs and start this new bull trend up to $73,000, $74,000. So that said, it's obvious that the market is very fearful. Now, what's the data that composes of this fear and greed index, and is it accurate? The crypto market behavior is very emotional. People tend to get greedy when the market is rising, which results in FOMO, fear of missing out. Also, people often sell their coins in a rational reaction of seeing red numbers. Extreme fear can be a sign that our investors are too worried, and that could be a buying opportunity. When investors are too greedy, that means the market is due for a correction. But is that true? Well, we'll find out here shortly. In terms of how they make this ranking and reading of 25, 25% of it is accounted by volatility, 25% is market momentum and volume, 15% is social. They've paused surveys, and I can understand why. Dominance would be the dominance of a coin resembles the market cap share of the whole crypto market, especially for Bitcoin. So I think that's based on Bitcoin dominance, yes. And then trends, Google Trends, which we can cover here shortly as well. So is it true that when this thing is very low and people are fearful that you should be buying? Well, if you do look back through June and May of 2022 on the Bitcoin and arguably XRP chart, you can see that this would be pretty close to those lows right back here, June, July. We were ranking in at about, $19,000 in terms of the price. Price actually did end up dumping even further on the Sam Bankman-Fried saga. And so as you can see here, we'll go ahead, and I don't know what just happened to this chart. Oh, we're on XRP now. Okay, so as you can see here, we'll go right here, that around June, July of 2022, we were at some major range lows of like $19,000 to $18,000, and I think this could have potentially been the bottom if it weren't for those fears and what happened with the Sam Bankman-Fried saga and FTX, which caused the market to finally reach a low and a bottom at about $15,000 $100,000, as you can see right here. So that said, around this time, and we're talking November of 2022, where was the Bitcoin Fear and Greed Index? We'll go over there right now. Around that time, we were still in those 23 to 24 ranges. But as you can see here, the Fear and Greed Index started pumping a little bit higher. In other words, people were less fearful. And in general, I'll go ahead and pull up another chart right here. As you can see in previous, this is the exact same chart. In previous bull markets, as the market continues to climb, right, you see this natural trend and increase in greed. In other words, right here at an early phase in the bull market, people were kind of in the middle. At a later stage in the bull market, around $12,000, people were far more greedy. And that greed continued through the entire range from $19,000 all the way up to about $55,000, and then through the all-time high, you had this divergence where price is going up, whereas fear and greed is starting to decline in terms of its reading. So it is important that you do get this natural increase in progression, which means that whenever I see a high reading on fear and greed, like in 90, 96, 90, 90s, 86, so on and so forth, through these ranges, you actually want to hold because people's greed tends to grow. So this isn't a bad thing to see. It's actually a healthy thing to see. And so I would argue that you don't want to just sell because you see extreme greed, for example, unless of course you're hitting that 100 range, in which case maybe it's okay to take a little bit of profit. But you also are going to see, right, the fear and greed index drop when we start to reach ranges where people are uncertain, or maybe they think the bull market's over. And so in similar fashion, if we come to present day, you can see that these readings are almost anomalies in typical bull markets, which leads me to believe, are we still in a bull market? I don't know. I'm starting to ask the question, right? Is this bull market over? From an intermediate term standpoint, when you look at the price of Bitcoin and arguably even the price of XRP or any altcoin for that matter, right? We've officially made a new downtrend. And the only thing really saving us right now, right, is the fact that we are just above these range lows, right? We broke down, we were being supported right here, and then we're sold off twice now. This is a double top on the range from a daily time frame. From a 4-hour time frame, you could see that we're consistently being sold off right around here, which speaks to indecision in the markets. Now, why are markets so undecided? Well, as of yesterday, the Fed put out the numbers, and the core CPI, right, the inflation rate year over year in the US finally reached 3%. The last time we were there was last year in 2023. And so we're finally trending down, and it seems to the Fed's target of about 2%, which they would consider a healthy rate of inflation, right? Which, when you really think about what it's cost people to live and what real inflation might actually look like, about 25.33% year over year at an aggregate rate, which means everything just costs so much more to live. So obviously inflation has got out of hand, and it's far higher than the inflation reading, which has led the Federal Reserve to keep interest rates higher for longer. But after the meeting, here's what one article had to say. Traders are betting that there's a nearly 93% chance that the central bankers will move to cut in September. And so it seems that the Fed and Jerome Powell really want to see inflation cool down in terms of basically all areas of the economy. The Consumer Price Index CPI report Thursday from the Bureau of Labor Statistics showed that prices fell 0.06%, the first decline since July of 2022. This morning's CPI report was arguably the most encouraging one the FOMC has received since it began its inflation fight nearly 2.5 years ago, wrote Wells Fargo economists Sarah House and Michael Pugliese. But is that true? It doesn't really make sense when you have Pepsi putting out warnings that their U.S. snack demand is subdued as consumer slowdown worsens. In the U.S., there is clearly a consumer that is more challenged, the CEO said. This suggests the cumulative impact of several years of price hikes has pushed consumers over the edge. And that's typical supply and demand economics, right? If people are earning less, if they're getting, choked into submission, if you will, because they don't have enough money to spend on their average, cost of living, which in this case, we're talking snacks. I mean, it's crazy. Well, how much does a snack cost? Well, if this year it costs $2 and then next year it costs $3 and then the year after that it costs $4, and on average I would buy, my household and a few children, a dozen of those for the week, and it's costing far too much, well then I would need, to do one of two things. I need more income. But if the entire economy is slowing down and I'm likely to lose my job because a company's not earning as much revenues, right? Well, then they're going to lay me off, or they're laying people off and cutting back costs. So I'm not going to get a raise if they're laying someone off, number one. And two, if these companies keep their prices high, then people aren't going to spend the money on those products, or they're going to cut back, which doesn't really increase revenues. So at some point, right, someone's going to have to give. And 9 times out of 10, these companies won't give in sooner than the consumer. The consumer usually gets squeezed. They stop spending as much, which then has an effect on the company, where the company has to actually lower prices or lay people off to meet demand, which when they lay people off, they have more capital, right, or access to capital that they wouldn't have had prior, which, allows for them to keep their profits relatively high or in a range while they lower prices on their products. And in the same article, Bernstein analysts told clients that these results signify an abrupt end to the strong period of growth enjoyed during the COVID-19 era. And, we all lived through it. If you're not like 2-3 years old by this point, you remember how it was. You remember how crazy the markets got from 2020 to 2021 due to quantitative easing and easy, access to capital and money printing. And separately, Goldman Sachs Natasha de la Grense said this: the key takeaways are that credit card delinquency rates are rising now above long-run averages, with a decline in average FICO scores, which is credit scores, across the past year due to the subprime category, or lower income. The risk from here is that a slowing labor market would disproportionately weigh on spending for lower income households. And so they're not spending as much on snacks when you really think about it, which is crazy, which when you look at credit and you look at delinquencies, doesn't help. We're reaching record highs on delinquencies for all commercial consumer loans from banks that we haven't seen since the tail end of the Great Recession from 2008 to 2009. And the same remains true on credit card loans. As you can see here, we reached peaks and highs at the, in the middle of the chaos, and then we started trending down. Well, we're now starting to create a new uptrend in seeing delinquencies, which means people are living on credit cards, probably losing jobs, not able to afford to pay that loan back, and they're going delinquent. So all of these things combined lead me to believe that consumers truly are getting crushed right now. So what does that mean for the crypto market, right? Well, the crypto market doesn't really have many institutions playing with a bunch of altcoins right now. It's a bunch of venture capitalists trying to sell altcoins to you. And so if the majority of the money and the money flows in altcoins come from the average person, and the average person is getting squeezed, the last thing they're going to do is buy an altcoin where it's going to dump 40, 50, 90%, right? And the first thing they're going to do is save or figure out ways to get back on their feet. This is all made worse when you look at the fact that the German government is still sending Bitcoin to Coinbase, Kraken, Bitstamp, and a few other exchanges in order to sell Bitcoin. They now only have about 4,900 Bitcoin, and this was by Arkham Intel over the last 14 hours. When I come to their website here, you can see that they actually have been continually sending Bitcoin. They're sitting on about 365 million Bitcoin, which is about 10% of their original holdings, and about 6.39K of Bitcoin left left. They are no longer quote unquote Bitcoin billionaires, right? Which at some point you're going to see this sell pressure decrease. And currently, anyone who has been bullish has been buying the dip. So now on to the good news. If this continues, if they continue selling and the price dumps to a new low, that's not a good look for Bitcoin. It's not a good look for the entire crypto market. But if we want to think about it in a different way, there is some positive news. The German government is selling, but BlackRock is buying. And here is the story in two charts. This is the German government, and they're sending it to all of these wallets, right? And arguably selling through these exchanges. And from those exchanges, we're getting boatloads of buying to BlackRock and what you would have as their custodial wallet over at Coinbase. So a lot of those wallets are tied to Coinbase. And as we all know, right, Coinbase is the custodian to a lot of these major ETFs and institutional players. So when you really take a look at this Bitcoin chart, there's a few key things that you begin to notice. The first that we notice is that it's obvious that this became a major point of resistance, right? That $71,500 range. It's also obvious, right, that there's a lot of interest right here in this range of about $57,000, right? By this double bottom right here, by this tweezer top right here, by another, double bottom on the wicks right here, and arguably a lot of indecision. Now, the good news is it seems that even though the German government and all of these bearish factors combined, we're seeing, consumers getting squeezed, inflation is still above their target, right? The interest rates are still high. The markets continue to be just confusing and unclear, and the SEC continues, trying to tear companies and crypto down. Ultimately, we're seeing enough support here. We're seeing a lot of indecision when you look at open interest, when you look at futures, when you look at just the price and what's happening. So if we don't break down below these lows at 54,000, right, then it looks like we may be in for a bit of a retrace. And that would actually carry over to XRP, which brings me on to XRP. And if you've been keeping up in our previous videos, you'll know that XRP and Ripple in particular has been working to launch a stablecoin for retail investors and arguably a lot of their institutional customers. And when we continue in this article, the Ripple stablecoin is expected later this year, and it will be apparently backed by one-to-one cash equivalents, including US dollar deposits, US government bonds, and other low-risk investments, which means it's truly collateralized. And so in that case, it would be very trustworthy. Now, this is great news for the entire crypto market and for Ripple as the SEC drops its key stablecoin investigation in a win for the crypto industry. As the crypto industry continues its calls for regulatory clarity, a glaring question has been whether stablecoins, typically digital assets pegged to and backed by the US dollar, should be treated as securities. And on July 9th, Jorge Tenreiro, the acting chief of the Crypto Assets and Cyber Unit, informed Paxos that he did not intend to recommend an enforcement action. The notice came more than a year after the SEC sent Paxos a Wells notice. And if anyone knows, right, the Wells notice is basically a death blow to any crypto company, because even if they win, let's just say in a lawsuit, ultimately the amount of time and money it costs them can make them go bankrupt. So why was this important? Well, Paxos operated under a stablecoin, and stablecoins still fall in a regulatory gray zone barring new legislation. But many argue that the absence of an expectation of profit, right, when you think about the Howey test, if there is no expectation of profit, it doesn't have one of those three pillars. A key prong in the test to determine securities separates them from any other crypto assets. I would argue at that point it's no longer a crypto asset because I don't get a stablecoin to make money, right? I'm doing it to protect or preserve wealth, if you will. A federal judge sided with Binance in a June 28th decision that held that the sales of BUSD did not constitute a securities offering and ordered the charge to be dropped, which kind of gives Ripple, right, the leeway and the clarity, or at least enough confidence to operate in the stablecoin market, which could be a major business development for them. Now, finally, we're going to move on to that major partnership. And the announcement comes from Brad Garlinghouse himself, the CEO of Ripple. In it, he states, first steps towards institutional crypto products is to have trusted benchmark reference rate. Nice to see CME Group and CF Benchmarks collaborate on this for an XRP index. The market has spoken. And the CME Group announced starting July 29th, benefit from transparent pricing on two cryptocurrencies, CME CF Internet Computer and XRP dollar reference rates, and real-time indices are added to our expanding suite of benchmarks. So major players like the Chicago Mercantile Exchange, which is very old and has trillions of dollars of trade volume, now feel confident and comfortable to work with XRP. And I had the question, right? How much volume does the CME actually do? And if they were to launch any XRP products now that they're, pricing them in, what would that look like in terms of volume? So that said, I went to ChatGPT because it's not that easy to get access to some of this data. They said, given the CME Group's total trading volume in 2023 was approximately 6.15 billion contracts, that doesn't really mean that much. But if you assume a conservative average notional value of 100,000 per contract, which is the middle ground estimate considering the diversity of contracts traded on CME, the total USD equivalent would be $615 trillion. So if XRP was to capture even just a small portion of that volume, it could provide the potential catalyst for XRP to start skyrocketing. And that's not including a positive outcome at the end of July in terms of their court cases. That's not to include the presidential election that's coming up in November, especially if we have the Republican candidate win, which is very pro-crypto. And that's not including the fact that we have recently reached a major low and a major support. XRP has not been trading very correlated to Bitcoin. Bitcoin's been dumping more in terms of percentage points. And so XRP's seen a lot of support, although this chart looks relatively similar to Bitcoin. As you can see, even on the daily time frame, it's ticking up and climbing. And in previous videos, we talked about how institutional players and bigger players are actually accumulating XRP consistently. So at this point, it seems like it's a matter of time before, any single dip at this point in time down to the, I would say, 30-cent range to 38-cent range would be a great accumulation zone before the move to an all-time high above $3.31. So at this moment in time, I would remain relatively bullish, considering, right, in most summers, especially in bull markets, we still see a summer lull. We see price action get kind of boring. Investors, we're talking the institutional players, go off on summer break and vacations with their families. They sell assets. They're not really doing that much. And typically by the end of the year, from October through January, markets really rally. XRP has failed to see that rally as of recently, and I would argue it's because of the court cases it's faced. But at this point in time, with all of the bullish news, it looks like XRP is not only here to stay, but is getting prepped for a major move to the upside. So if you enjoyed the video, thanks so much for watching. Smash the subscribe button. And be sure to go to bullrunners.com to get early access to our underground guidebook to become a crypto millionaire. Appreciate you watching the video, and we'll see you on the next video.